Welcome back to Investing Talk podcast.
Today we're looking at AST SpaceMobile.
And this stock, it's maybe the single highest risk, highest reward thesis in the entire communications sector today. For those of you just joining the conversation, what AST SpaceMobile is trying to do sounds a bit like science fiction.
It really does.
They want to provide direct-to-device, or D2D, 4G and 5G broadband connectivity globally to unmodified smartphones.
And that unmodified part is the key.
Exactly. The phone you're holding right now, with no new chip, no external hardware, could connect directly to a satellite in low Earth orbit. That is the entire game.
If they pull it off.
Right. If they pull this off, the implications for, global communication and further valuation are just staggering.
It's the ultimate attempt to just eliminate coverage gaps everywhere. We're talking about connecting billions of people who have zero access right now.
As usual, before we start, subscribe, like, and comment to this video to support the show. Okay, let's jump right into the fundamentals, starting with where the money is, or maybe where it isn't.
Well, the first thing any investor has to understand is that this company is pre-revenue.
Completely pre-revenue.
Completely. Their business is entirely focused on capital expenditure, on the constellation build-out. They're, building the highway, not collecting tolls yet.
So that immediately puts it in the high-risk category.
For sure.
But, and this is the key, the thesis just took a massive, crucial step forward, a critical de-risking event.
That step was the successful launch of Bluebird 6 on December 24th, 2025. And this wasn't some minor test.
No.
This was the validation of their commercial satellite design. And to get the scale of this achievement, you have to understand the hardware.
The antenna.
The antenna. Bluebird 6 has the largest commercial phased array antenna ever deployed in orbit. It's spanning nearly 2,400 square feet.
2,400 square feet. Just to give you a mental picture, that's roughly the size of a doubles tennis court.
Exactly. Floating in space.
Why does it need to be that enormous?
That is the physics problem they had to solve. You have to capture a tiny signal from a phone antenna and talk to it from space. To do that without specialized ground hardware, you need an absolutely massive array.
To focus the signal.
To focus it. And Bluebird 6's size gives it 10 times the capacity of their old prototypes.
Yeah?
That's why they're confident it can hit speeds up to 120 megabits per second, D2D.
Okay, so the technology is validated. That's a huge relief for anyone who doubted the core physics. But now we shift from engineering to, well, the industrial challenge.
Execution.
Right, execution. What's the forward guidance for deployment?
The plan is intense. I'd even say aggressive. They're aiming to deploy between 45 and 60 satellites by the end of 2026.
The entire core of their initial constellation.
Yes. And this isn't theoretical. This means they need launches scheduled every 1 to 2 months, all through 2026.
And that brings us straight to financial health. A schedule like that requires serious CapEx. I'm seeing massive capital raising and, well, no surprise, negative free cash flow. And huge scale. They're building out nearly 500,000 square feet of manufacturing facilities.
You're right to focus on the cash burn, but they've been very proactive in securing their runway. This last quarter, they did a substantial $1 billion convertible senior notes offering.
Due in 2036.
Exactly.
Yeah.
This is the money that funds that 45 to 60 satellite build-out.
Okay, let's break that down for a minute because the debt management here is really key. They got a huge chunk of capital, but they also did a bit of financial engineering on their existing debt, didn't they?
They did. They used part of a share offering to fund a $50 million repurchase of some existing notes.
And what did that do?
That move alone immediately cut their annual interest expense by $13.5 million. It shows a management team that's balancing this huge need for growth capital with, smart debt optimization.
So the big question is, based on that $1 billion injection, do they have enough runway to actually hit that 45 to 60 satellite goal through 2026?
The current consensus is yes. The capital provides the liquidity they need to execute on that aggressive roadmap. They are capitalized to build the constellation.
All right, let's talk competitive moat. The space sector is getting pretty crowded. We see giants like Starlink, OneWeb. What protects AST SpaceMobile's business?
Their moat stands on 3 very strong pillars. And the first one is proprietary technology.
The patents.
Over 3,800 patents, all protecting that unique D2D transmission architecture. That includes the design of those giant antennas, the Bluebird design itself, which is extremely difficult to replicate.
Okay, what's pillar 2?
The differentiated product. We keep coming back to this, but it's everything. They connect directly to unmodified smartphones.
Right, Starlink needs a terminal, a dish.
You need a dish. AST SpaceMobile uses the phone you already own. That difference is a global game changer for accessibility.
And the third pillar, which I find really interesting, involves collaboration.
That's the network effects. They aren't trying to do this alone. They have partnerships with over 50 mobile network operators, MNOs globally.
And these are major names.
Major names: AT&T, Verizon, Vodafone. This is so crucial because it secures spectrum access and it builds the distribution channels right in. It creates this cellular integration mode that rivals just can't easily replicate.
Okay, so that's the fundamental promise and the technological defense. Let's pivot now. Let's move into the technicals. A stock like this can't possibly trade smoothly, so let's talk price action. Volatility.
Oh, we've seen a lot of volatility. Even with the good news, we saw a 7.3% decline right after they announced that huge convertible notes offering.
The market saw dilution risk.
Exactly. Short-term financing uncertainty.
But what shifted that structure? What was the catalyst?
The successful Bluebird 6 launch, the orbital confirmation, that acted as a major breakout catalyst. The market's focus is shifting fast. We're going from can they even build the prototype to can they scale production.
So the technicals are firming up.
It's reinforcing bullish structures on the charts. It suggests the focus is less on existential risk now and more on the execution timeline.
What about the flow of smart money? Insiders.
That's another fascinating piece. We saw a clear bullish insider signal. Director Keith R. Larson bought 675 shares for almost $50,000 on December 10th, 2025.
Okay, but I have to be the skeptic here. 675 shares. It's not a massive purchase for a director. Why is that significant?
Because of the timing. It was right before the successful Bluebird 6 launch was announced. It signals confidence, a willingness to put personal capital to work right before the stock's biggest technical hurdle.
So management knew they were about to deliver.
It certainly suggests that. And then there's the institutional side. Let's look at that $1 billion convertible offering again. The initial conversion price is set at approximately $96.30 a share.
And what does that price tell us technically?
Well, it effectively establishes a potential technical support floor way out in the future. Think about it. Sophisticated institutional money just made a $1 billion bet that they're willing to convert their debt to equity at $96.30.
They're signaling they believe the company is eventually worth at least that valuation.
Exactly. It shows powerful long-term conviction. It's a statement that if the execution goes to plan, the current market price is seriously undervalued.
Moving from the technicals, let's look at how the broader market is perceiving this execution as we dive into sentiment.
The quantitative sentiment scores, they really reflect the duality of the situation. We're moderately bullish overall. The weighted average score is sitting around 0.30.
And what's driving that optimism?
The technical successes. The Bluebird 6 launch and the factory expansions in Texas and Florida, those are concrete, physical proof of progress.
But you said duality. The financing news must have thrown some cold water on that.
Oh, absolutely. The financing news brought in significant negative sentiment scores. It pulled that average down. It reflects that market uneasiness about the debt load and, potential shareholder dilution.
So the market is pricing in the execution risk aggressively.
Very aggressively. If they miss that deployment timeline, the dilution risk becomes very real.
It's a high-wire act. What are the speculative catalysts that the market is watching for that could push sentiment higher?
Two big ones. First, the launch cadence. If they can really keep up that aggressive schedule, a launch every 1 or 2 months, that could spark MNO revenue pilots way sooner than expected in 2026.
And that would be a huge signal.
A powerful signal. And second is the re-rating. Right now, the company is valued strictly as a pre-revenue venture. But once they get 15 or 20 satellites operational, we think around mid-2026, they could announce their first commercial revenue. And that inflection point could trigger a massive, immediate re-rating of the stock.
Okay, no investment is without risk, especially in this sector. Let's really dig into the hurdles, the bear case.
Yeah, this is non-negotiable for investors. The entire thesis hangs on flawless execution.
So risk number one has to be execution delays. That commitment to launch 45 to 60 satellites by the end of 2026 is an incredibly intense schedule. Any delay, a manufacturing bottleneck, a launch partner problem could strain cash burn.
And push that revenue inflection point into 2027 or later. That's the single biggest risk.
But what's the mitigation?
Well, we do have some strong evidence. The successful and, more importantly, on-schedule Bluebird 6 launch shows they can meet deadlines. Plus, the 500,000 square feet of manufacturing infrastructure they've built suggests they have the machinery and the workforce in place.
Okay. Risk number two, dilution and debt. We have to come back to that $1 billion convertible note. It creates this persistent overhang of dilution risk, right? What happens if the stock price stays way below that $96.70 conversion price?
That's the risk. If the stock never hits that price, they have to pay back the debt in cash in 2036. If it does rise, the bondholders convert, and the number of shares goes up dramatically, diluting current shareholders.
So it's expensive growth.
It is, but it's essential growth. The risk is manageable, but only if the funds successfully enable that constellation build-out.
And finally, we have to talk about competitive pressure. Starlink and OneWeb have larger constellations already up there and, frankly, much deeper pockets.
And this is the final counter-argument, that differentiated moat. AST SpaceMobile's unique direct-to-device advantage is a strong strategic barrier. Rivals are moving toward D2D, sure, but they're playing catch-up on the antenna design and the MNO integration.
So wrapping up our analysis, what does this all mean for someone looking at this stock? We've got validated tech, massive financing, but a razor-thin execution timeline.
Given the successful technical validation, the capital they've secured, and the clear path to revenue, our overall bullish score is a solid 8 out of 10.
That's a strong score for a pre-revenue company. Let me try to summarize the core thesis for you. AST SpaceMobile has validated its game-changing D2D technology with Bluebird 6. They've secured $1 billion to fuel their growth, and they are positioned for a huge revenue inflection in mid-2026.
If they can successfully execute the deployment of those 45 to 60 satellites.
That's the biggest.
The target horizon here is a multi-year hold into that 2026 commercialization phase. If you're watching this stock, the next 90 days are absolutely critical. We need to see them validate that Q1 2026 launch roadmap.
The question you have to ask yourself is, are you willing to bet on perfect execution to unlock a truly transformational technology?
It's about more than just money at that point. It's about changing how the world communicates.
Make sure you hit that subscribe button to catch our next analysis. We'll see you next time.